I think it's madness not to start on a daily chart. That's how I was taught maybe, but what's the harm? Even if you're trading minute to minute, right? There could be a massive level on the daily chart. If you've got a 1 minute chart or a 5 hour chart or a 4 hour chart up, there could be a trend line coming down from like 3 months ago, right? So why not start on the daily chart? You can quickly zoom in. Money's at risk, right? It's your capital at risk. Do your due diligence. I would always start on the daily chart, and then what I tend to do then is get an idea of the bigger picture, the bigger levels. I would then step in and analyze it, maybe either a 4 or 2 hour chart, then to do another level of analysis, maybe drill down into some levels that are a bit closer to where, I'm looking to either enter the trade or put a stop. And then after that, when it comes to execution, I usually go into like a 15 or 30 minute chart for the execution on the trade. But bearing in mind, these are trades that I'm holding for 2 to 3 to 4 days, maybe out to an extent of maybe 2 to 3 to 4 weeks kind of stuff. And for me, if I'm in a trade and it's going the right way, those trades, one of the best trades I ever had was I sold the euro 5, 6, 7 years ago, and it just kept going down and down and down and down. So all I kept doing is moving my stop, moving my target, moving my stop, moving my target. It almost got to the point where I wanted to be out of the trade. The trade was hugely profitable. I was pyramiding in, but pyramiding the right way. I was adding less and less exposure, so I had most of my exposure on at the beginning. I was just getting very small increments, but the trade just looked good, and I like the trade. One thing as a little tip that I say to traders that I mentor is, let's say you're short, right? And there is a natural tendency when you go towards a target to want to take off the short because you're hitting target. You might move your stop down, and there's like an itchiness to click that mouse and book that profit, right? And so what I ask traders to do is I say to them, get a pretend gun like this. So you get your pretend gun, and you put the pretend gun to your head, and then what you say to yourself is, would I go long here? Would I buy it and go long here? And most of the time the market's falling, you're short, you're in the money, and most of the time if you do this and say, would I go long here? The answer is like, no, there's no way that I would go long here. Well, if there's no way you would go long, why the hell are you buying back your short, right? The only reason you're buying back your short is because you want comfort. It's a psychological, for you, psychologically, it's like, oh, I booked the profit. And then usually what happens is it carries on going down and down and down. And then you get a win, and then you're angry at yourself with the win because it carries on and to go further into profit. So this is just like a little psychological trick. I do it with myself, and that keeps me in trades. And I've run, the best trade I ever had was shorted the euro. It fell like something like 10 big figures, right? 10 big figures, so, and it was the best trade I've ever done, kind of stuff. And the reason for that is that I let the trade run.
And most traders get like I do in the plane. They completely lose their mind. They get super emotional, and they start doing the wrong things because they can't realize that their emotions are in control. They need to say, okay, I feel like this, I hate this feeling, but this is what always happens when I get to this situation. I need to put it aside, and I need to follow my rules and just bite the bullet, hit the button, open the trade, close the trade, whatever it is, follow that system.
Confidence is an emotion. It is not a fact. So your confidence is the emotion that reflects your perception of your skill. And if that perception is off, right, in terms of overestimating or underestimating, you're going to make bad decisions in both directions. But the lacking of confidence tends to create a lot of risk aversion, especially as you're scaling up. So you have to spend more time actually systematizing your own strategy, right? And a lot of times that is like a thing that traders just sort of aren't doing. They kind of know it because of the momentum of their day-to-day. But if I were to wake you up at 4 a.m. and say, what's your strategy? You got 30 seconds, like, tell me how you make money. Like, you might be able to get 80% of it correct. I'm not saying like you don't know it at all. But the difference between the 80% and the 100% is the difference between having your confidence be like this versus like this, right? And having a firm base with which for you to scale up on. right? It's not just about having the capital to leverage. You need to have the foundation of your own confidence to be able to leverage and to be able to take those losses and to know that you can. So systematizing your strategy a bit more, taking time to really understand how you make money, I'm not saying you have to create an algo here, but you're just going to have more clarity. And I've had traders who, even are like 15 to 20 years in who do this, and it becomes a big catalyst for them making bigger bets. So that's number one. Number two is just look for any other kind of flaws or biases that may, exist here. All right. And if you are somebody with high expectations, you may have significantly undervalued your previous accomplishments. Your previous, right? You may feel like at any one point, like you're going to be broke again, or maybe you busted a couple accounts, 5 years ago, and the threat of that kind of still looms in the back of your mind. So you've got these ghosts that you kind of have to get rid of, and to prove like, oh, listen, I am actually good at this, and to feel that way, oftentimes comes by recognizing your past accomplishments that have gone unrecognized, or like correcting some of the ghosts or trauma points, in the back of your mind from past losses, mistakes, etc.
I think the markets are a mirror. The markets are the greatest revealer of what you need healed internally, which means if you're studying the markets, you're really studying you. Studying yourself is much more important than studying the markets, because at some point, you know what moving averages are, you know what candles are, you know what risk and reward is. You don't need to study new strategies. You need to study why you've never made $1 million a year. That's what you need to study. Because that's an entirely different question, my man, right? It's like, instead of saying, why is this strategy not working? Why have I never made $1 million in a year? What am I afraid of? Because one of my beliefs is if you've never done it, then you're afraid of it. Simple as that. If you've never done something, then you are scared of it. You are petrified, mortified. Why? Find out those answers. Study those deep, dark cobwebs about yourself. Go as deep as you can internally, because at some point, in my personal opinion, you can only learn so much about the markets that matter to you. Right, that matter. Warren Buffett, like, he's not studying candlesticks, right? He knows what PE ratios are. He's not going back through and reading books about PE ratios. He's studying the individuals that run the companies. He's learning the psychoanalysis of the CEOs and CFOs and CMOs. He's learning more about the people's behavior. He's listening to what they say. He's listening to how they present themselves. That is equally or not more important than what the company itself is doing, in my opinion. And I think that that's a very interesting shift to understand, that we need to study us more than we need to study the markets.
Anybody can grab an account and start trading. And other businesses and other jobs, you have to get degrees and you have to go to school. So it's harder to jump in. So since everyone can jump into this, everyone has an opinion, there's lots of people who do it. But really, to make it in this job and to get the benefits of it is to really just grow through all of your buttons. It's going to press every button you have. If you're angry or you have scarcity and fear and whatever it is, comparing yourself to others, it's for sure going to come up in this job. And not that it won't come up in other jobs, but part of the reason I think those of us who chose this, we chose it because we know that it's going to further us in breaking free personally on a lot of that stuff. So for me, it's always working on embracing that part of the job. And when that pain comes and that suffering comes, it's just another thing that I needed to learn, and it needed to come. So I'm never trying to look at it as, why does this happen to me? This sucks. This isn't fair. One of the big themes for me was always injustice or unfairness, or things that, if you work hard and you study it, then you should get it. And sometimes in trading, you just don't. And then sometimes you get it when you didn't work hard and you didn't study it. And it just goes back and forth. And I had to learn to unwind a lot of that fairness aspect of things, because that's not how it works. And I think embracing that process and just knowing that this job is going to really do that for you. And if you stick with it, you have to do that or else you won't make it. And I appreciate that about this more. That's probably the biggest thing I appreciate about the job. So I would tell others to not shy away from that stuff.